Hi, Wes. Very good to see you. Today we are doing some myth busting, specifically the myth of retiring in a lower tax bracket. And I've often heard it said that if you do not have a tax plan, you do not have a retirement plan. We're going to get into it. But I think a lot of us assume that when we're retired, we're not going to be working, we're not going to have an income, so we must be in a lower tax bracket. But that's not necessarily true, right?
That is correct. This is a hot topic, and it's something that we are very passionate about
Yeah.
covering because it's often overlooked. And it's a topic that we teach a lot about. In fact, here at Patriot Wealth, we developed a course called The New Reality in Our Retirement. And my dad and I put that together, and he's been teaching it for many years. And this is one of the topics is taxes. So the thought process that, hey, we'll stash money away, tax deferred in our 401ks and traditional IRAs. And then when we get to retirement, we'll be in a lower tax bracket. Sometimes, as you mentioned, that's not always true. Oftentimes we don't have the deductions that we had in our working years. And then we take a look at, where our money is coming from or our income streams in retirement. And you can see here that the few that do have pensions still, that's tax deferred basically. So when you pull the money as a pension, that's going to be taxed at ordinary income rates. Same thing coming from a 401k if it's not Roth, right? And then there's always subject to tax regarding your Social Security benefits, which they could be taxable or they could not be. It depends on your other income streams, which is the provisional income formula. More on that in just a moment.
Okay, yeah, because we are also in a historically low tax rate right now. And when we take a look at taxes, from many, many years ago, starting at 1913, I mean, I'm shocked at how high they were at one point, Wes.
Yeah, you can see there that the top marginal rate federally was 94% back in 1944. Can you imagine that?
No.
And there's obviously a gentleman that turned politician, but before that, he was an actor. That was Ronald Reagan. And at that point in time, he was making only just a couple of movies per year because every dollar he earned above that threshold that was locked in there, I mean, it was taxed at 94% federally, plus the state of California was going to get their 6%. It made no sense for him to keep working. But what this tells us is that there's historical precedence for tax rates to go up. And we know that the so-called Trump tax cuts, those will expire here in the not too distant future and then revert back kind of a best case scenario at this point. That's what the outlook is.
So now I do want to talk about then what we can do today to guard against those tax hikes in the future, because we know they're going to go higher. What action should I be considering now so that I can have that tax-free income in retirement?
Well, being proactive with planning, and that may be using some Roth conversions, right? And so that's not necessarily turning everything all in one year, going from pre-tax to tax exempt via Roth, but it's strategic. So it's an amount per year that you want to evaluate and be sure to take a look at what your current tax brackets are and where you could be headed. Other items could be HSAs or health savings accounts. That could be a source of tax-free income in retirement for those 65 and older. And then cash value life insurance. So this is often not talked about all that much, but structured correctly, you can actually take money from that via loans. And these are loans that you may or may not pay back during your lifetime, but certainly at death, it comes out of the death benefit. But it's smart use of it if it's structured properly. And then you have municipal bond interest. That's another source of federal tax-free income. But keep in mind that just because you have municipal bond interest, that doesn't necessarily mean that you won't be paying tax on your Social Security benefits because of how the provisional income formula is calculated. So that's kind of a complicated, complex thing there. But again, it all goes back to planning and looking at various sources of income and being strategic throughout. That's what's important.
Right. No, I think you laid it out well. It certainly is very complicated, but at least I feel a little bit empowered knowing that there are options. So if somebody wanted to walk through those options with you to create that tax-free income, what's the best way to reach you?
Best way to reach us is reach out via email, info@patriotwealthnc.com, or you could always give us a buzz, 919-322-4113.
All right. Very easy. Wes, thank you so much for your time. I appreciate it.
Thank you.